Before we begin the discussion of the range and varieties of fees that are out there, we have to make a distinction between two fundamentally different types of fees, and that is advisory fees and asset management fees. These fees are unfortunately and mistakenly conflated in the industry, but these two roles cannot be any more different, the advisory and the asset management. They're as different as a pharmacist and a family doctor. One wouldn't call a pharmacist to ask him what's wrong with their sick child, nor would one expect their family doctor to be in the business of selling pills. Yet, that is exactly what happens in finance, and it's largely a result of a historic blunder. See, historically, prior to the 1980s, the large banks, particularly in Canada, but even in other parts of the world, generally acted for and in the interests of their corporate clients. At the same time, at other institutions, namely investment dealers, they were busy brokering deals, structuring products, IPOs, M&As, etc. Banks at the time offered no financial planning, no estate planning, no cash flow management, no insurance, none of that. That was done largely outside of the domain of financial services, usually with accountants or lawyers or other trusted advisors. But as we moved into the late 80s, there were a number of legislative changes that now allowed the banks to buy and acquire broker-dealers. So for example, in Canada, Bank of Montreal acquired Burns Fry. CIBC acquired Wood Gundy. Scotiabank acquired McLeod Young and Weir. Obviously, this was in the best interest of the banks, as it allowed them to increase their margins, their clientele, their service offerings, etc. However, it was in the absolute worst interest of the clients, as it brought the foxes into the henhouse. Banks could now be paid for creating product for and with their corporate clients, and then selling it off on the other end to their retail clients. This created huge conflicts of interest. This consolidation led to a variety of abuses. And when the brokers that were now working for these banks started developing a bad reputation, they knew that they had to rebrand. And virtually all of them rebranded under the banner of advisors. They've begun introducing services and offerings as financial advisors. And this conflated the advisory services and the asset management services, such that today, almost every broker, almost every mutual fund or any fund salesman, and almost any asset manager will refer to themselves as investment advisor. As a consequence, investors have not been able to distinguish when they are paying for which, and the industry has taken full advantage of that. As opposed to a culture of stewardship, the industry has now provided us with a culture of salesmanship. To avoid the confusion that the industry has imposed on us by conflating advisory fees and advisory services and asset management fees and services, it is absolutely imperative for investors to analyze and consider the fees of these two independently.